Welcome everyone to Vested Interest. This is Shane back again for our stock pick of the day video. It is December 5th. We are going to take a look at one out of the industrial sector today. We're going to take a look at a manufacturer of tools, Snap-on. Let's jump right in. If you want to know more about this company, check them out at www.snapon.com. That's www.snapon.com. That is their homepage where I pulled this information from. In 1920, a cultural shift was underway in the United States as the automobile was rising in popularity, creating the need for an emerging automotive repair industry. Joseph Johnson, an engineer from Milwaukee, had an idea that would revolutionize repair and make work easier for professional mechanics. 5 unique handles and 10 sockets that snapped on interchangeably, coined 5 to do the work of 50, launched a company that would shape an industry. Joe and his co-worker William Seidman spent weekends using crude bending jigs and pure muscle to fashion 2 sample sets of 5 handles and 10 sockets. Using only these demo sets and brochures, Johnson and Seidman generated over 500 COD orders. With this initial success, the Snap-on wrench company was formed. Johnson and Seidman sought out the expertise of Stanton Palmer and Newton Tarbell to make and sell their product. They would quickly leave their mark with groundbreaking ideas such as the magic green cloth and direct selling. Production was ramped up with the opening of a 2,500 square foot manufacturing facility in Milwaukee, Wisconsin, and the first 500 orders were filled within 6 months. And the rest, as they say, is history. That is how Snap-on began over 100 years ago now, back in 1920, and they are still making tools. You may have some of their tools in your garage at home. Let's keep on rolling. Now, the reason we are taking a look at them, down 0.7%, not a huge drop, but a drop nonetheless. So I thought we'd take a look at Snap-on Incorporated, ticker SNA, out of the industrial sector. Closed out the day at $278.94. 52-week low as $220.21, as high as $297.26. So they are still closer to their 52-week high than their 52-week low. Average volume of 232,000. Today was 247. Looks like they are very volatile. Look at that volatility throughout the day, up and down, all over the place. Market cap of 14.722 billion and beta of 1.04. So they are just slightly more volatile than the overall market, and you can see that volatility, right? You can see that throughout the day. Price to earnings PE ratio at $15.16 per share. This is not very common, but another one here that we see the EPS earnings per share sitting at $18.40, and it is higher than the price to earnings ratio. So very nice earnings per share on this one. Earnings date is going to be coming somewhere between January 31st and February 5th in that week there. Dividend yield $7.44. They are a quarterly payer. Divide by 4 or just wait here. We'll see it in a minute. Dividend yield at 2.65%. Nice starting dividend yield on this one. Ex-dividend date November 20th, so we're past that. Looks like they're going to pay out on December 11th. So if you were to buy them now, you would be waiting a while to get that next dividend, and you would not get the dividend payout on December 11th. You need to buy the day before or sooner before the ex-dividend date. They do not have a 1-year estimated target date for the stock price here on this one, though we'll see an estimate on the next page. Now, I like to get into statistics, look at dividend yield theory, see if there is potential undervaluation. To do that, click on statistics, go down to dividends and splits. We look at their 5-year dividend yield average of 2.48. We compare it to its current 2.65, or over here, forward annual dividend yield, same number, 2.65%. And since it is higher, that speaks to some potential undervaluation according to dividend yield theory on this one. Payout ratio is low at 35.2%. A lot of runway to increase that dividend over time, pay down debt, reinvest back into the company, whatever they want to do with that free cash flow. They have a lot of free cash flow left even after paying their dividend. We already looked at the ex-dividend date and the dividend payout date. Now, you're going to want to get into the financials of a company. If you are an individual stock picker, you really want to do your research and your due diligence on the financials. What does their balance sheet look like? What does their income statement look like? Is their revenue increasing? What do their margins look like? Are those increasing over time? Are they paying down debt? What's their debt to equity ratios? A lot of good information. Are they rebuying stock? Are they issuing more stock and diluting you as a shareholder? For this particular exercise, we are going to look at free cash flow. We want growing free cash flow over time because dividends are paid out of free cash flow. And typically when a company has growing free cash flow, their dividends grow along with it. So 2019, you can see 575 million here. And I know this is 575,200, but in Yahoo Finance for whatever reason, you add 3 zeros to the end because they don't add the extra 3 zeros. It's 575 million. Just trust me on that, or go look at Yahoo Finance and click on this page and it'll say it right in the top of the page. But 575 million in 2019, 2020 943 million, so definite growth there. 2021 looks like a little dip down in 2021, though we're going to look at their repurchase of capital shares here in a minute and see that that definitely is accounted for there. And a big drop. Now here is where the real big drop happened. 2021 to 2022, big drop there. It looks like they've rebounded in 2023 to date so far, but 2019 to 2023, they are definitely growing their free cash flow over time, though like I said, 2022 here was a bit of a drop. Now, as you can see as well, repurchase of capital shares, nice repurchase of shares every year, and a big jump up in the repurchase of shares in 2021. So that definitely accounts for a bit of that drop down in 2021, but not so much in 2022. This was definitely a drop in free cash flow here. But again, looks like they're back on track here in 2023. Now, I always recommend more than one source. What we saw before was Yahoo Finance. This is stockanalysis.com. You pick any sources that you like. Just make sure you're picking more than one so you can make sure the information you're getting is accurate and up to date. Now, they have 5 stock analysts that have taken a look at this. They call it a consensus buy, though it is right on the edge of a hold and a buy. So you could go into this particular website and you'd be able to see how many call it a sell, a strong sell, how many call it a sell, how many might call it a hold, how many call it a buy, and how many might call it a strong buy. So go ahead and check them out. They updated here on October 19th was their last update. So this is a couple months behind where we are to date, but we're going to take a look at it anyway. 5 stock analysts take a look at this. They have a low estimate of $240. That would be a 13.96% decrease from where it currently sits. And I would like them better up against this 52 or this low estimate here, back closer to their 52-week low. Average estimate of $306. That would be a 9.7% increase from where it currently sits. And if it happened to hit their high of $336, that would be a 20.46% increase. All the while, you could collect that 2+% dividend yield if you were to buy them now. I like to get into statistics here and look at return on equity and return on invested capital. I like 10% or better is my criteria. Return on equity on this one, 21.3%. Beats the 10% I'm looking for. Same with return on invested capital. Beats the 10% I'm looking for at 16.49%. I also like to look at earnings per share growth. They have a forecasted estimate over the next 5 years of 5.47%. That beats the 5% I'm looking for, and they do expect revenue growth over the next 5 years at 2.7%. Now let's look at the payout ratio. They're saying 40.4% here. On Yahoo Finance, they said it was around 35, 37. So we're just going to say slightly under 40% or even right at 40%. Still a lot of runway to increase this dividend payout over time, and very, very nice dividend growth on this one, 14.29%. Quarterly payer pays out February, May, August, and November. So that is the months pay date March, June, September, December. This ex-dividend date is February, May, August, November. So the payout date is March, June, September, December. We went back to 2020, November 2020, they were paying $1.23. They raised it up November 2021 to $1.42. Raised it up again November 2022 to $1.62, and it looks like they're going to raise it up again in 2023, or did in 2023 with this next payout in December at $1.86. So I would expect, if they're going to maintain this dividend growth here in 2024, the November ex-dividend date with the December payout will be another dividend raise. This is the vested interest stock screener. This is how I set up the videos. It's also how I look at a company on a high level to see if I'm interested in investing. If it does meet 5 of the 8, or if it's a financial company 6 of 9, like a bank 6 of 9, then I would add it to my watch list, do more of a deep dive, get into the financials, do a discounted cash flow analysis on it, and see if it's one that I'm really interested in. And if it's one in my portfolio already, I often check back with this particular screener to see if it's still meeting my investing criteria, and if I want to continue to add to it, or if it's one I need to review and see if it still meets my criteria, or if I need to remove it from my portfolio. Well, that is it for this one. These are supposed to be quick hitters, trying to find value in the market. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community. Let me know what you think of Snap-on. Is it one in your portfolio? Is it one you're watching, maybe waiting for a better entry point? Or are there other companies in that particular field that you maybe like better? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Snap-on you'd like me to work into the rotation and do a stock pick of the day video on, go ahead and drop it in the comment section below. I'll add it to the list and get to it at some point. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.